Okay, hi, Ben Coin Chess and Wine here. It's Saturday, November 6th, 2010. Just want to do a video market recap for the week ending November 5th. Just kind of talk about some basic strategy going into next week. And you're looking at a daily chart of the ETF for the financials, the XLF here. And I've got these Bollinger Bands here, which again are pretty good at measuring relative highs and relative lows here. And you can see for going on 7 months, really, what happened was in May, June, July, July and August, September, October, and even some parts, early part of November here, the $15 level was extremely tough resistance. It was a proverbial brick wall for the financials. And I think, especially in October, where we saw that real heavy selling in Bank of America and some of those other financials here, accompanied by some strong selling volume here, I think there were many people who were lured into, and I guess reasonably thinking so, that the financials were on the cusp of a major breakdown and testing these summer lows at the very least. Because again, this blue line here, this 50-day moving average, you can see this darker blue line, was really looking pretty vulnerable here. But instead, what happened was we never got that. We never got that breakdown. So it was a false breakdown. And generally, what happens is you really in the market, when you see a false breakdown that leads to an aggressive move higher, you really need to respect that, because what that's telling you is that this false move down, that was the fake out, and this is the real deal right here. This breakout that we saw in the past few days, and it's come with an accompanying increase in buying volume here, and we have indeed broken above this $15 level convincingly, again for the first time in nearly 7 months. So that really needs, that really commands your respect, and I think it really puts the bears here in a tough spot. Now, on a very short-term basis, along with the broad market, I would be reluctant to chase financials up here. Again, this is a very, very aggressive breakout right here, covering a lot of ground from 1450 up to about 1570 here in a mere 3 days. Again, when you clear this, as soon as we cleared above this $15 level, I'd imagine many bears were forced to cover here. I think this took out a lot of cover stops up here. So I think that definitely had something to do with the short-term parabolic move here. But I would definitely look to be a buyer. I think a lower risk entry point into the financials would be a nice little retrace down to 15, 20, 25, something like that, maybe down to 15, and you're looking for, of course, for that $15 level to now act as support after, again, a good 6 or 7 months of it acting as a very tough resistance. So this is a major, major development here for the bulls. You can see the Bollinger Bands after they were pinching in right here. This long string of dojis after the false breakdown here. Finally, the Bollinger Bands are starting to expand, which I think shows an increase in volatility after a period of dojis, which you'd expect. But again, price is now outside the upper Bollinger Band and has been so for over a session and a half to close the week. So I'd be reluctant to chase financials here, but I would be a strong buyer on an orderly pullback here. And the same kind of goes for the S&P 500 in general. We've got a very strong uptrend, to say the least, above the rising 20 and 50-day moving averages. The longer-term moving averages down here are starting to turn up. Again, price is outside the upper Bollinger Band, and as you can see, roughly 90% of the time, price is within those bands, with the 20-day moving average acting as the middle band. So I think, again, if we see any further strength in the early, again, this is just very short-term strategy. If we see any kind of strength up to 1240, 1250, 1260 even maybe, early next week, I would use that to continue to layer out of longs. But I don't want that to cloud the picture of what I'm trying to paint here, as the broad market is very strong here. I'm just talking very short-term strategy going into early next week. I would, on a very short-term basis, again, next few days as a swing trader, I would use any continued strength to layer out of existing longs and kind of lock in some profits before I look to buy back and kind of load up the truck on any kind of pullback here.